with BK Forex. Today we are going to talk about trading news. Many experts will tell you to avoid trading news. You never know what's going to happen, spreads will widen, and volatility spikes. And in some ways they are right. Trading news can be dangerous, but it can also be very profitable if you know how to do it right. This past week we bought Eurodollar and Aussie dollar after the US inflation report. CPI came in under expectations, showing zero inflation in the month of July. This is a big deal because stubbornly high inflation has been one of the biggest central bank headaches. Now we are finally seeing evidence of price pressures cooling, with the inflation rate coming in at zero against expectations for a modest rise, and a year-over-year rate cooling to 8.5% from 9%. We're finally getting there. Price pressures are finally coming down. When the data was released, the US dollar sold off, and aggressively after the report, just as you can see in this dollar-yen chart. Eurodollar shot higher. You could have just jumped right in on the trade, but for me, one of my rules for trading news is to wait, because patience pays off. Wait 5 minutes after the report for a better price, to avoid the hype, and make sure that you didn't miss something, because too often we have seen a currency pair spike on a good news and then reverse completely, in the seconds thereafter. Because while at first glance the news seemed to be great, there could be other factors at play, like expectations that were misaligned or weakness in the details. So waiting that 5 minutes, make sure that you let the market digest the data and that you are trading and following the real move.